I know a few more
So,
are. Give it a minute, just a couple minutes.
all right, guys, sorry about that. Had some technical difficulties, but let's get started. So this week, there was a lot of support for us to get another call going this evening. So it's only going to be a 40-minute call. We're just going to go over really quickly what's going on in the market this week and how you can take advantage of it. Right now, the overall S&P 500 and the Dow is down. That's primarily due to a trade war between the U.S. and China and a lot of uncertainty, obviously, with what's going on with COVID-19. There are a lot of meat shortages right now in the United States, so you guys can be able to capitalize on that. BYND is Beyond Meat and Plant-Based. This is a company that's up 25% as of today, so I think you should check that one out. Moving forward, if there continues to be a shortage of meat, you're going to see more and more plant-based companies taking over. Another one that we're going to talk about tonight is Wayfair. So Wayfair is an e-commerce giant that specializes in retail, like furniture, stuff like that, all online. And they're up, I don't know, Brendan, what are they up right now? 40%?
You're talking about Wayfair?
Yeah.
I don't know I can tell you, they were up 9% today. Yep. But you're talking about a stock that, a month ago was trading at $21 and today hit 180. So you're talking about something that if you would have invested in about a month and a half ago, you would have, you'd be a happy camper right now. You would have 5 or 6x your money.
And when did you become aware of what was going on with Wayfair?
I had paid attention. Probably it got on my radar after it gapped up, and I'll go through it and show you after it gapped up over $45. But I'll show you guys why we don't like gaps in charts. Gaps in charts is not a good thing, and I'll talk about that in a minute. And gaps like to fill both ways. So it gapped up pretty hard, which we'll talk about in a little while, but gaps have a tendency to fill, so I stayed out, and shame on me because it went from 40 to 180. So the hell do I know?
Well, it's a learning process, and you've done a lot of things correct in the market. So, you win some, you lose some, right?
Yeah, and I try my best to avoid FOMO. And FOMO, for those of you that are keeping score, is fear of missing out. So when something in 2 days goes from 20 to 40, 99 out of 100 times buying is not a good idea, because that means there's a bunch of people that bought at 20 that are dying to sell their shares to you at $40 so they can double their money. However, in this was a unique case where it was a super short squeeze, which is a little too technical. We won't talk about a short squeeze, but that's what you're seeing here with Wayfair, is a gigantic short squeeze.
Awesome. You want to show us
the graph for it?
Yeah, go ahead.
So Wayfair is like similar to those Amazon and people like that, correct? Online shopping, stuff like that. So Absolutely. How would you be able to? How would you be able to get a pulse on something like Wayfair to know that, hey, they have a good chance of doing well? Just like with Beyond Meat, factories run out of meat, so meatless companies are going to start taking over. How would you get a pulse on something like Wayfair?
Well, you got to be up to date with the news. That's the most important thing. Brendan gets a lot of his news before it actually hits the publications, which is why he's able to accurately predict what's going to happen next. I read the Wall Street Journal, and I get a lot of my information from there. Obviously, politics has a big thing to do with it. I know a lot of people don't like politics, and I completely understand because it is so divisive. But you do have to have a certain basic understanding of what's going on with the government because it just has such a big influence on the markets. What's going on with the U.S. and China has a direct influence on manufacturing in this country. Exactly, Daryl. Morningstar, that's a really good app as well. For example, with China, a lot of our tech companies manufacture their products there. And, if the president set a tariff that's going to stop manufacturing in China because people aren't going to want to go there because it's going to cost too much money, right? It's like a tax. That's going to de-incentivize people to do that. So therefore, what's going to happen? You're going to have more expensive products, right? We all like cheaper products in Walmart. That helps the consumer, right? You're able to buy more. That's why the classic example of an American is wearing Air Jordans and still has an iPhone, right? I think that's a primary result of free trade with China. So I definitely think you should read a publication. You could do Wall Street Journal, Morningstar. Fidelity has good news resources, just to stay up to date with what's going on. That'll help you.
All right, thank you.
For sure. Anybody else have any questions before we get into Wayfair?
Yeah, I got a question, Benny.
What's up, Mike?
What's up, bro? It's a little off topic, but in terms of Wayfair, it's more about the airlines. I know Steve actually threw up something in the chat the other day about Warren Buffett selling all his stocks in the airlines. But for someone that's looking to stay into it for a long run, I mean, I'm just looking at it from a point of view where regardless of whether or not I was investing in stocks on airlines, I would just assume that within a couple of years, they'd be back up to, where they're used to being at. So would it be a wise decision to invest into them now, especially as the price continues to drop?
So the way I look at it is, obviously, if Warren Buffett does something, we better listen. Okay. He's perhaps the greatest financial mind when it comes to investing that we know today in the US stock market. So there's a reason why he did that. He wanted to get out. He didn't believe in the stability of the airline industry currently. However, for you, how old are you, Mike? 28?
No, I'm 30.
30, young guy. So this is going to be a long-term move for you. I would prefer you to look at Boeing. Boeing is taking a lot of hard hits right now, but airline production is going to grow. It's just not going to be right now. It's not going to be in the next 2 to 3 years. It's going to take time. And Warren Buffett just didn't believe in the stability currently. But if you have the time on your hands, then I think that's a good investment idea for you. What do you think, Brendan?
Yeah, I agree. I don't think you can go wrong. I would say, though, if I had to put a bet down, that I think you can get a better entry point than where you're at right now. I think we have some more downside. Who knows? We'll probably look back in 6 months at this video and you're going to go, fuck, that guy was a genius. Or you're going to say, man, he was an idiot. I'm making a pretty bold proclamation, but the way I see it, fundamentally, we're going to be way off the mark with where we've been. And we just have to have more downside. The only thing, in my opinion, that's keeping the market up right now is obviously the Fed pumped in trillions of dollars. But one of the things that makes this time around a little bit different than 2008 is we have such massive technological advances that a lot of the markets are run by computers. And they, if programmed correctly, they can really do whatever they want with the markets now. And I'm not saying it's rigged, so don't get that kind of a conspiracy. I'm just saying that computers now have made trading and buying and selling a little bit more advanced. Because when you think of a market, right? Think of the stock market. If you get rid of the word stock and you just say market. If I say, hey, I'm going to go to the market, instead of, now people think a grocery store, but back in the day, a market was like a farmer's market, where you can buy and sell goods at the city center. And it's all about buying and selling and trading with other people inside of, your community. I grow carrots and you grow fucking broccoli and we both show up at the market and we either trade it or, hey, I'll sell you this, you give me this, that's what a market is. And so the stock market is just a place where everybody in theory should be able to buy and sell shares of a company. And it was, now it's just, there's a lot more computer advancements that I think are keeping the market up right now. But I think if we didn't have computers that were really heavily involved in the markets, I think we'd be at all-time lows right now. Not all-time lows, but lows for the year. I think we'd be at our lowest point of the year, and we're far from it. We've bounced quite a bit. So that's kind of my 2 cents.
And in addition to what Brendan just said, that's why I'm so bullish on tech stocks right now. For the year-to-date numbers right now, tech is up 10.56%. While other companies are down 30 to 40%. So you need to take that into account. I've talked to you guys a lot about QQQ, the NASDAQ 100. You can get in that. I think it's going for 220, and you'll be well diversified with Apple, Microsoft, Google, Facebook, all those FANG stocks. They're going to help you grow, and these companies are going to continue to prosper. The dividend on that, by the way, Steve, I know you asked me. I had to go back and check that for you. It's actually $1.62. All right. So for every share you have of QQQ, you're going to get that $1.62. Now, if you wanted to just get into one of the best companies in the NASDAQ, I would recommend Apple. Apple is a phenomenal company. It's got a great balance sheet. It's going to continue to do well. The dividend on Apple is $3.28. So keep that in mind as you go forward, because the tech companies are going to continue to ride this bull, in my opinion, while the S&P 500 that's more exposed to sectors like oil, manufacturing, they're going to continue to suffer. You know what I mean? All right. So we're going to talk about Wayfair, like we said. Brendan's going to pull up the graph for us, and we're going to show you exactly what happened with this e-commerce company after all the good news came out about people buying so much from them. So Brendan, you can take it from here.
Sure. Okay. So we're going to start by looking at, so get in the habit of looking left before you make any sort of buy or sell in any stock. And when I say look left, what I mean is that you want to go back and look at the price history of a stock to get an idea of where key levels were. And that's going to give you an idea of how to act in the present moment. So the past is usually a good indication of what to expect in the future. And so we're going to start by pulling up Wayfair here. And I will just go through some technical analysis with you guys and just kind of show you, how this whole thing played out. So are you guys able to see my screen? Yes, no, maybe.
There we go. Yep.
There we go.
Right. Sweet. Okay, so first thing we'll point out, just because my high personality wants to show you, you can look right here. Today's realized gain. I had a pretty good day of trading today. I made $5,700 today, so not bad for a Wednesday and a half day of trading. $5,000 a day keeps the job away, right? So that's my goal, by the way. So if you do 5,000 a day, anyone want to tell me how much you'd make a year? Take a guess. 252 trading days in the year.
1.25.
1.2 million.
Yeah, well, that's 1.22 million. Yep. So $5,000 a day. The name of the game is consistency. You're not going to make the 1.2 million in a day. The name of the game is consistency. So if you can consistently just rack together good decisions and good trades, 5,000 a day over the course of a year is 1.2 million. So that's right on pace for what I'm trying to do. It's not always that good. It's not always that bad. So anyways, okay, let's get into Wayfair. So Wayfair, the ticker symbol, if you're keeping track at home, is W. So all you got to do is search W to understand or to pull up Wayfair's ticker. So here's your chart. We are going to go, so we're going to pull up the daily chart. So each one of these little bars here represents one day of buying and selling. This is the last year, but let's look at the last 10 years of this stock just to get an idea of what we're looking at. So you can see Wayfair at one point was down here around 19 bucks. And then it had a nice rally all the way up to about 174. And then the Rona hit. So now I'm going to change the chart to a year. So a year ago at this time, it was trading around 160 bucks. It was kind of in a downward channel. So it was already kind of a weak kind of looking stock here going into the coronavirus. If you look at this kind of this sort of a trend, that's a negative trend, not something I'm too terribly excited about. And then obviously the coronavirus news hit in February. And so right here, mid-February is where you saw the runoff where it kind of fell down like a waterfall, which is normal for almost any stock during the coronavirus kind of pandemic, right? When everything happened, people got scared. They sold everything so they could cash out their positions, hold cash and get rid of stocks. And we had this gigantic drop. So just technically nothing will go down forever, just like nothing goes up forever. So this sort of an aggressive move, I mean, we're talking about something that went from $96 a share in the course of a month, went from $96 to all the way down here to $21. Well, that sort of a drop is not going to sustain or stay very long, which clearly we see here, and I'll get into the other side of the move. But let's first try to seek to understand why why we stopped right around $21. And so if you're wondering, like, man, who the fuck could have predicted this shit gone from $95 and would have stopped down here around, 21, 22, 23, right in this lower area? Because, I mean, if you look now, we're at $180. You would have loved to have been a buyer right here. But problem is many people don't buy here because of how scary this looks. I mean, you're looking at something that started at $96 and it's 20 bucks. Who to say this wasn't going to go to 10? If you were a buyer at 20, it goes to 10, you would have lost half your money, right? So, but this is the power of charts. So I want to take you back and show you. Let's go back in the next last 10 years. And wouldn't you know it, we have some price history down in this area. It looks like Wayfair, when it first started trading, came down. It really enjoyed this area as a like kind of a turnaround point. So it didn't like the price up here at 40, but down here in like the $18, $19, $20 range, there's a lot of trading history right here. And then if you look, this level was the key level, which was 26. So that's most likely where I would have been a buyer on this particular chart, just because if you look, we had hit 26, hit 26. A couple times it came down here and tried to test it. My entry here would have been 26, and my sell limit would have most likely been right here at 19 bucks. So you'd have been a buyer at 26. You would have been risking about $6 or $7, which isn't an ideal risk reward setup, if I'm being honest with you. However, in this case, you know, we had lots of price history way above these levels. So it would have been safe to take an entry right around 26 and maybe add all the way down to like the $20 range on this move. But even still, you didn't need to catch the bottom because there were signs of a reversal. So let's go through the daily chart here for the last year. I'm actually going to go, let's do the last 100 days of trading. So this is the last 100 days. So if you look here, we're looking at, that's January 1 of 2020. And, you know, here's the coronavirus melt. And then boom. Okay. So if you know the power of charts, you would see that we have a general downtrend here. So here's the opposite of a flagpole. And then we had a bullish flag set up in the middle of a bearish downtrend. So this was a key pivot point right here. This right here was your key level. This was the key spot. So if you were going to be a buyer, I would have been a buyer on the break of this flag north, which happened overnight. That's why there's this gap. If you're wondering like, hey, what the fuck happened? This day of trading ended here. And then a lot of people must have recognized this setup. They really liked what they saw. A bunch of people bought the stock before the stock market opened, which caused this really nice gap up. And this bad boy never looked back. As soon as we gapped up, we ran like a motherfucker. So this got us out of the downtrend, which totally erases this now because now we're in a clear uptrend. So the stock charts in general don't like these gaps. So if you see here, we have a gap in the chart, and this is why I didn't play it, because I'll show you price history and show you why charts don't like gaps, because gaps have a tendency to fill. So my thought here was that this was going to roll back down. It was going to kind of collapse or close this gap and then maybe run back up. But we that's why I stayed out. And let me show you why. So let me go for the past year. You're going to see my point. So if you look, see this gap? This was a negative gap. On this date, which was in, looks like October, this bad boy gapped down. And there was this big hole in the chart, and charts don't like that. So what happened was, look, this bad boy just kind of traded sideways, and then, oh, wouldn't you know, it ran up just high enough to close the gap in the chart. See right here, it closed this gap, and then we're back down. So now we look at the last few days of trading, and we have some really interesting stuff here. So I'm going to go to now each of these candlesticks is going to be 10 minutes of price history, and I'm going to go to the last 7 days of trading. So here's the last 7 days. This is 1 week of price action you're looking at. So if you were a buyer last week, you could have been a buyer at 120, and today we're at 180. You still would have massive gains on this. But now I'm definitely skeptical of potentially even entering this. Or this gap. This gap scares me. So this gap is likely going to fill at some point soon. I don't know exactly when, but we are looking at this is a bullish setup here. So if you look, this is called a cup and handle. And we're likely going to see more highs tomorrow if I were a betting man, because if you look right here, I'm going to do my best and then I'll shut up and see who has questions. This is called a cup and handle. So part of being a good chartist and a good trader is understanding good patterns. This is a cup. It's a teacup. You see it? You have the side of the cup. You got the bottom of the cup here. You have the other wall of the cup, and then here's your little teacup handle where you could hold it to drink out of. This means that we are likely going to see a move higher because this key level will break most likely. And when it does, we're going to see some all-time highs. Now, if you were trying to guess, and I said I'd shut up, but I'm going to say one more thing. If you're trying to guess how high this will go, we got to remember, you got to look left. So we're going to go daily. I'm going to pull back 2 years of price history. And here, I'm going to give you my best guess for where I think this can go. So we are going to show you a trend line. So if you look, I'm going to draw a line. See how the price was right here, and then it hit once, hit twice, hit 3 times, and I'm starting to form a trend line. Every good trader would just pull this line out, and then that's where I'd be looking to sell this. So if I was holding shares of Wayfair, I wouldn't be holding many. I would have already sold some to lock in profit. But in case we get one more big push, I would be targeting that 220 area. And then anything 220 to 225, I'd sell everything and I would not hold because this is going to come back down at some point, and this is going to gap fill. They're going to fill these gaps. I don't know about this one way down here because it is a tiny gap, but this is a massive gap in the chart that will eventually fill. So I know that was a lot of info, but does anyone have any questions on that?
I got a question, Brendan. Each time you see a cup handle, what does that mean?
Yeah, so it's just a bullish setup. So you remember how I was showing you those flags?
Yeah, they're bullish.
So another positive charting strategy is called a cup and handle. And so that's actually a pretty beautiful cup and handle, if I'm being quite honest with you, because you can clearly see, I mean, I showed it to you. You could clearly see the cup and you could clearly see the handle, which is from a technical standpoint, is a bullish signal, meaning that the stock is likely going to keep moving up.
Got you. Thank you.
But because that cup was formed on the daily, that was formed on the 5 or 10 minute chart that I was showing you, it is likely going to run up for only a day or two, and then it's going to come back down. If that cup took like a year to form, like let's say I wish I had an example, but let's say that chart that I showed you was a year of price history, and that cup took 1 year to form. That means that when it breaks north, that it's going to go up for a long time because it took a long time to form that cup. Because that cup that I just showed you only formed in a couple days, that means when it breaks through, it's only going to run up for a couple more days, and then it's going to come back down and fill that gap. Does that make sense?
Yeah, beautiful. I got it.
Yeah, the shorter it takes to form, the shorter the breakout will be north. The longer it takes to form, the longer the breakout will be north. And that's one of the key differences between investing and trading, is that trading will happen kind of quicker over a couple days. Investing is like, hey, you're buying it and you're not even looking at it. You're just going to let it go for, weeks, months, or years at a time. But still, even if I was an investor, you want to recognize these patterns so you know when to sell, because I'm sure a lot of these guys that had a ton of money in the markets wish they had sold their shit in February. And instead they don't normally check their account every day, and they checked in a week or two later and they're like, holy shit, I just lost 20% of my account. And that's one of the advantages I think being a trader has, is that I'm constantly plugged into what's going on in the markets. And if you're a good investor, you are too, but there's a lot of folks that just park their money and stuff, and then they just, live their life and they never look at it. You want to keep a pulse on it, like as if it was a patient in the hospital. You want to know what its pulse is.
Brennan, can Uzi, go ahead.
No. I was gonna say thank you. That's it.
Brennan, can you explain?
I got a question. Sorry.
Go ahead, bro.
So yeah, sorry about that. So with teacups, yeah, what's up, buddy? How you doing?
Good, man.
So teacups, would they typically happen sporadically? Because I understand that you said that it was took within like a few weeks, right? So within teacups, they happen pretty rapidly, and then they would substantially kind of fill that gap. Is that what kind of happens?
Yeah. So there's two things going on with this chart. So let me show you the two things. So we have something that I don't like, and then we have something I do like. So let me show you. So let me go back to, let me go back here. Let me go to the 10 minutes, and let's go to the last, that was 14 days. Let's see the last 7 days. So here's the last week of trading, Brian.
Okay.
Here's today's action. So you can see these little gray lines that run right through here. That tells you the days. So right here to right here was today's action. There to there was yesterday. And then there to there was Monday, right? So what we have here, so we have this gap, which gaps like to fill. So sometime in the near future, Okay, I don't know if it'll be tomorrow. I don't think it'll be tomorrow. If I had to guess, I would guess by Friday or maybe Monday or Tuesday of next week. This is going to eventually roll over and it's going to come back down here. And if I was looking to buy this stock, I would probably want to buy on the gap fill right here at about 134. You can see that was kind of a key level. And I can show you, I'll just put that my little line there. So that 134 was a key level. You can kind of see it, it hit its head once, hit its head twice, hit its head 3 times, got close to hitting its head and then came back down, tried again and then came back down. And then the close of, what day was that? Today's Wednesday. The close of Monday, it closed right at that level. And then you can see overnight, it just burst up. So that 134 was a key level, which if I was going to rebuy this at some point, that's where I would buy. So once this rolls over, I would buy somewhere in here because you have some good price support to be able to enter. But short term, like if I was just going to trade this for a day, I am buying the low part of this handle and I am hoping for that breakthrough. And usually the breakthrough on this handle, so you guys can all see the cup that formed, right? It took only 2 days. It was yesterday it started and then today formed a beautiful cup, which means that our breakout, so because this took 2 days to form, the breakout will be 1 or 2 days and then it's going to roll down if I had to bet on it. And usually the move through the cup and handle, so if you're trying to guess like, man, okay, so once it breaks this line here, how high do I think it's going to go? Well, I showed you the best case scenario is at 220 level, but most likely what will happen is usually a cup and handle, the breakout is as high as the depth of the cup. So this cup starts at 181 and goes all the way down to about 161. So you have $20 is how deep this cup goes, which means that if I were targeting how high I think this would break out, it usually breaks out high as deep as the cup. So at 180, it's most likely going to hit 200. And 200, just from a mental standpoint, is a pretty significant level. That's most likely where I'd sell. And then if for whatever reason, if it happens to break 200, then 220 is the top. There's no way going any higher than 220. And I know that because I can show you the chart that proves it.
Thank you, I appreciate that.
Yeah, if I'm being way too complicated, guys, just let me know. Because I want to make sure. Okay.
Can you explain how you maximize your profit and minimize your loss through the usage of price? What is it? Stop loss, right? And limit orders. Yeah. Can you explain that, please?
Yep. I'll show you even how to input one of those orders. So I'll walk you guys through the one I did. I was showing Daryl that. So let me show you how to use a stop loss. Okay.
I would also point out the fact that the computer has that algorithm that you were telling me about when it comes to if you don't type it in, they'll choose you to buy the highest one.
Oh yeah, that's a market order. I can talk about that too. I'll talk about Vinny's first. So Vinny wants me to show how to use a stop loss. So let me show you guys how to use a stop loss. Okay. So let's use, I don't know, what company you guys want me to use? Pick anyone, I don't care.
Apple.
Apple. Okay, let's use Apple. Okay. Okay. Wait, am I screwing up their ticker? APPL, right? Isn't that what it is? Oh, AAPL. Whoops, my bad. Okay. Perfect. Wow, look where Apple closed today. Apple stopped right at $300. Okay, so this is perfect. So let's just use the last 5 days. I'm just going to show you the last 5 days. So if you guys looked, the price stopped out today right around $300 a share. So let's just say, play hypotheticals with me here, guys. Let's say you bought this today at right here. Let's say you bought it at $300 on the dot. So I'm going to put a line there just so we can all see it. So let's just say you bought today at $300 and you're trying to protect your money and hey, no matter what happens, I don't want to lose on this trade. So you would just go down here and this is going to look different on all of your applications, but I'm going to show you how you can do this. So let's say you bought, let's just say you bought 100 shares of Apple. So you guys all see this is how you input an order. I can buy it, I can sell it, short it, cover. We're gonna say I bought it, I already have 100 shares, and now I'm looking to set a sell order. So what I do is I can just go over here to a conditional trade, which I will put in here. So I'm gonna make this really big because all the other stuff on my screen can make it seem pretty distracting. I don't wanna spook you guys with a lot of stuff on the screen. Okay, so we have AAPL. We have AAPL, and I can set one of two orders. So let me show you the basic one. I can just set an order that says, hey, stop limit on quote, or stop on quote. When this thing hits $300, if it hits 300, just sell it. I don't even want to lose 1 cent. I just want to sell it right here at 300 bucks. So you can put a stop order right at 300 to protect your investment. Or you can do one of two things. Let's say, hey, if it hits $300, I want it to sell. But if it also hits $315, I want to sell because I want to lock in my profit. Then you can do what's called a conditional sell. Let me pull that up so everyone can see it. So we're going to do one cancels all. I'm going to show you what that looks like. So you can do sell 100 shares of Apple at 300, or you can sell 100 at $315. So now what I've done, so I would just hit the submit button. It's not going to sell my stock if I'm between that range. So if the price is at 302, 305, 306, 308, 309, I still own Apple and I haven't sold it at all. But if it were to drop suddenly and hit $300, I would automatically sell and take a 0 cent loss because I bought in at 300. However, if it starts to go up and move its way up and it hits 315 without hitting 300, so it stays between 300 and 315, think of it like bumpers at a bowling alley. The price is between, it's not in the gutter, it's just right in between. It's between the 300 and the 315. As soon as it runs up and hits 315, it'll automatically sell for you, and you'll lock in your, you bought at 300 and you sold at 315. It'll automatically lock in that that trade for you. So that's how you set a stop loss or a stop sell order.
Awesome.
Brendan,
Thank you.
is that if you have that set up exactly like how you just explained,
Yeah.
and it goes down, say you bought it at 300 and it goes down to like 290, and then it's on its way back on an upward trend, and it exactly when it hits 300, it's going to sell, even if it's continuing on to like an upward trend.
Yeah. So if you're saying, I just want to make sure I'm understanding you. You're saying that, hey, I own it above at 300, it drops below 300, and then it comes back up. Will it sell it at 300? Is that what you're asking?
Right, because now at this point you have it set between 300 and 315. So if it's continuing on an upward trend, and it could go possibly all the way up to 315, it's just going to automatically sell it at 300. So then you don't even have a chance of making any more money on it, right?
Yeah. So once I get in at 300, as soon as I submit that order, if the price ever touches 300, it's going to sell, and I'm going to be out of that trade for a 0 cent gain or loss if it drops below 300. So that literally means, and this has happened to me, I can't tell you how many fucking times this has happened to me. Like, I'll buy it at 300, I'll set the order at 300, the price will go and hit $299.99 and then turn around and go to 360. And it sells it automatically for me right at 300. And then so I like check my phone and it shows the stock at 360, and I'm like, oh hell yeah, fuck yeah, like I'm pumped because I think I just made $60 on that trade. And then I go back in and look at my account, and then right before it ran to 360, it just did a little, it just hit 300 just for a second, just to sell my position, and then took off like a racket. So that's happened to me. I can't tell you how many times, but that's also saved my ass. I can't tell you how many times, because I've also been in positions where, hey, I tell it to sell at 300 and I check it later in the day and it's at 260. And I'm like, oh no. And then I'm like, oh yeah, wait, I did sell that. I set that sell order, and now I don't take a loss at all because it's sold at the price that I bought it at. That makes sense.
Would you say it saves you more than it hurts you?
Yes, totally.
All right, guys, we have less than 2 minutes. So anybody have any last questions for Brennan?
I have a question. I'm going to divert a little. Brennan, the RSI indicator, which is the yellow line, anytime it's above the line, that means it's overbought. And at overbought, you would never want to buy, right?
Wow, look at you talking about RSI. That's some dirty talk there, Uzi. Yeah, let me show you guys. So here's Wayfair. Here's RSI. This is what he's talking about. Anytime the stock goes above this line right here, the stock is considered to be overbought. So Uzi, way overbought is at 90. Overbought is technically above 70. This number is at 73, which means yes, we are technically overbought. However, that is not something that scares me yet, because once that RSI gets to 90, then I'm like, oh shit, this is really overbought. It's overbought, but can still be bought more. It's just something to be aware of, and knowing that if you are buying this, you're buying something that's overbought, and that you need to have a quick trigger finger if the stock starts to move against you, because it is overbought, which means there's going to be a lot of people that will sell when it's time to sell.
And you can apply the same thing if it's below the line, which is oversold. It takes a temporary dip, and that's when you also buy, but not always.
Yeah, exactly. And I'll share my screen. I know we're running out of time here, but I'll quickly share it. The RSI did dip here, Uzi, right here. See how it was oversold? And if you follow that down, you actually could have been a buyer right at the low point if you were a buyer during that oversold period.
Got it.
Cool.
What software are you using?
E-Trade Pro.
Okay. Do you have to pay for it?
You do. It's I believe $100 a month or $100 a year. I forget.
It's a big difference, bro.